Hey everyone, and welcome. Today we're going to cackle a real powerhouse in the world of investing, the ETF. And we're going to break it all down using a super simple idea you already know, a shopping basket. Okay, let's get into it.
I mean, just think about that for a second. Sounds kind of complicated, right? Maybe even impossible unless you're a billionaire. Well, stick around because the answer is way, way simpler than you think. You know that feeling. You walk into the world of investing and it's like a massive supermarket. There are thousands of individual stocks, bonds, all these different things lining the shelves. It's so easy to feel completely lost, wondering, what do I even pick? But what if someone had already walked through all those aisles and put together a perfectly balanced, pre-packed basket for you? Well, that, in a nutshell, is the real magic of an exchange-traded fund, or ETF. Okay, so here's the official, kind of textbook definition, but don't let it scare you. All it's saying is that it's a fund that holds a whole bunch of stuff, stocks, bonds, and you can buy and sell it on a stock exchange, just like a single share of a big company. So let's go right back to our supermarket analogy. The ETF is that pre-packed shopping basket. So instead of buying every single apple, orange, and box of cereal one by one, you just grab the whole basket. With that one single purchase, you instantly own a tiny piece of everything inside. It's a brilliant concept. Let's make this super real. Say you want to invest in the 500 biggest companies in the US, the S&P 500. Instead of making 500 separate, individual purchases, you can just buy one share of an S&P 500 ETF. And that's the power of it right there. Just one single transaction, and boom, you're invested across that entire group of companies. Talk about an amazing tool for getting instant variety or diversification in your portfolio. All right, so we've picked out our basket. Now, how do we actually pay for it and take it home? Let's head to the checkout and talk about how these things actually trade. Now, this sentence right here really hits the nail on the head. This is what makes an ETF so unique. You're getting the best of both worlds, the broad variety of something like a mutual fund, but the easy, flexible trading of a single stock. Let's really break that down. Just look at this comparison. With a traditional mutual fund, you only get to buy or sell once a day at whatever price is set when the market closes. But an ETF, you can trade it all day long while the market is open. The price is changing constantly, second by second, just like a stock. That is a game changer when it comes to flexibility. So we've got this pre-packed basket, and it's super easy to buy. But why has this idea become so incredibly popular with investors all over the world? Let's get to the good part, the payoff. There are 4 huge advantages. First up, instant diversification. We talked about that. Second, that amazing trading flexibility. Third, transparency. You can literally see exactly what's inside your basket every single day. And fourth, and this is a biggie, lower costs. This right here is one of the main reasons so many people love ETFs. A lot of them are what you call passively managed, which is just a fancy way of saying they're built to automatically follow an index, not to pay an expensive team to try and pick winning stocks. That automation keeps the operating costs way, way down. And what does low cost actually look like? Well, get this. It's not crazy to see an expense ratio of something like 0.03%. You know what that means? For every $10,000 you invest, you're paying just $3 a year. That's just incredibly efficient. And that really is the bottom line, isn't it? When you put all the pieces together, you get this incredible package deal. You get all that variety, all that flexibility, all that transparency, wrapped up in a simple and often very, very low-cost tool. So to wrap this all up, what do you absolutely need to remember? First, an ETF is your shopping basket. It's a simple way to buy a ton of investments at once. Second, it trades on an exchange just like a stock. Third, it gives you instant diversification. And finally, it's a super flexible and often really low-cost tool for any investor. So, I'll leave you with a question to think about. Now that you know how these baskets work, what kind of basket would you want to build? One full of tech stocks? Or maybe companies from all around the world? The possibilities, as you can imagine, are pretty much endless.